right, welcome back. The breaking news is that the Fed has left interest rates unchanged for the third consecutive time. Pause, but signaling that several rate cuts may be in the offing next year. Let's get some reaction from Dennis Lockhart. He's been in the room where it happens, former Atlanta Fed president. Dennis, welcome back. Good to have you with us. What do you take from the statement and from the action?
Action was no surprise. I don't think anyone really expected that they would raise rates at this meeting, so no big surprise there. I expected a little bit more in the statement, a little bit more of a nod to the disinflation that we're seeing. It was a minimalist statement. It didn't say much at all and didn't change much from the last meeting.
Did say inflation eased, but is still positive. I mean, that's sort of covering both sides of it, I guess you would say politely.
Yeah, I would, to my reading, a quick reading, it basically repeated much of what was said in the last meeting. So, it may be a signal that they really don't want to communicate a lot that will inform markets at this particular juncture, and they want to wait until next year.
Well, they did sort of inform the market. At least the market feels informed because the stocks have been moving up and yields on the 10-year went down. To the question of when or whether the Fed and by how much the Fed might cut rates next year, how do you interpret what they said today? I mean, I think that the Fed fund futures market's indicating a higher probability of cuts beginning sooner in the year.
Well, I looked at the summary of economic projections dot plots, the notorious dot plots, and it struck me that there isn't a tight consensus on the number of cuts next year. The great majority of the committee, of course, is projecting cuts, but they range from 2 cuts to 4 cuts. And so when you look at a median is just sort of the middle point of that range. So I don't think they're showing that they have at this point at least, a real tight consensus around how many cuts next year.
Mm-hmm. Dennis, this might be a little unfair, or maybe it's just a blatant statement of the obvious, but it seems that markets have been in the driver's seat of, and basically telling us, yeah, this is what the Fed's going to do.
Mm-hmm. I tend to agree with that. And the markets have a tendency to get ahead of the policymakers. The markets and market practitioners work on a somewhat different logic, and that is to anticipate early. That's how you win. Whereas the policymakers are probably more inclined to be cautious and to wait and to make sure that, in this case, they have inflation under control, which is a bias toward more inaction in the near term. And so there could be a disconnect here between market anticipation of cuts and what the Fed is really thinking.
And I wonder if the chair is going to look at does he see the market reaction before he goes out to give his remarks? Because he might look at this and go, whoa, wait a minute, I better dial this back.
Well, I'm sure he sees the market reaction, but I don't think he improvises a great deal. I think his responses to questions and his commentary at the beginning are pretty well prepared and scripted, and he's not going to freelance when he's up there. So it's hard to react to at least initial market reaction just on the spot. And I think his mindset would be markets will be markets, and the initial reaction may not be how it settles out later today or tomorrow.
You say that, in your view, a soft landing for the economy remains plausible. We had a guest on yesterday who kind of made the case that we're probably in that soft landing right now. How do you react to that?
Well, I think that case can be made. We are seeing disinflation, and disinflation that has exceeded expectations. We have a very strong labor market, very healthy labor market, and growth is slowing, but it's still positive. Mm-hmm. That's sort of a definition of a soft landing, is that you don't do great damage to the employment picture. You keep growing, but you get inflation down toward 2%. So, yes, we probably are in the beginning of what could be a soft landing.